All right. So yesterday we spoke about demand and supply extensively. I explained how that um, I explained the importance of line charts, how that a lot of us trivialize line charts, not knowing that line chart is one of the powerful tools or charts that is needed to interpret price accurately. You don't have noise, you don't have fake outs, or you easily determine um, levels or zones using a line chart. You can fizzle out noise on chart using a line chart. You can use line chart to also know the directional bias of a particular asset class. Went ahead and also taught us how to draw four scenarios of demand and supply, explained a lot of dynamics, and also said keenly that demand and supply alone, trading demand and supply alone, will not make you profitable. It will make you end up in a lot of losses. Okay, a lot of losses if you don't add it with other trading um, approaches. And I explained it on chat to us. I showed us an example, life example, right? Today, I didn't want to mention anything as to, oh, this is the approach you need to put in to make it to reduce your losses and to increase your profitability index and all that. But I also want to add to what I said yesterday. I want to let you know that if you know how to plot demand and supply levels or zone, it is easy for you to determine directional bias. You will almost always be correct as to the direction of the market. Almost always. You will know the directional bias of the market if you know how to plot demand and supply. Very important, very powerful. You will almost know how to determine the directional bias of the market. Okay, so that being said, I also said that today will be dedicated to more examples, both on what's it called, on currencies and volatility index. So let's start with currency pairs, so that let's start. If you have any special currency pair you want us to work on, why not? Let's have it. But I think I love this guy. USD, JPY, GBP, USD. I think a lot of people also trade USD. I also love what do you call it? I trade gold and US30. Those are my major pairs that are my focus. You can work with others if you want to. Okay. So, like we said, your data from your broker, ensure that you choose a broker that has a lot of data on the highest time frame they can provide. Okay, for me, I use Anzo Capital, and this is the highest time frame that they can provide me. It can be the data they can provide as far back as 2012. Okay, as far back as 2012. So that's roughly 13 years ago. They tried. I said minimum of data that you need is 5 years. These guys have done 30 years of data. It's not even a demo interface. Then secondly, you will note that yesterday when I was using what do you call it? While I was taking the class, the first session, I specifically did not use a demo account. I use a live account because the environment of a demo account and the data available is different from the environment of a live account. They are not the same, although the same data is supplied, the same everything is supplied, but that feel that it gives to you is different. The control, the confidence it gives to you is different. Knowing that your money is involved, the attachment it gives you is different. So it entirely places you on another level of what's it called, discipline to ensure that what you are doing, you know it. If not, you just want to come and throw away your money to the market. Are you seeing that? So basically, this is what we'll be dealing with. So today, let's quickly go into one or two examples and then prepare for the week. The week is opening up powerfully. Personally, I'm looking forward to selling GBP USD, but let's confirm that by demand and supply and see. I have other parameters that makes me say I want to sell GBP USD and buy UJ, then sell gold to an extent to buy it massively. Oh, it's going to be a massive buy. All right, so let's go. We're on daily or monthly time frame. Highest data here. I switched to line charts. My line chart is a blue line color. So I said instead of using, what do you call it? Instead of using rectangular tools, I will just focus mainly on using my line tool. That's my horizontal line. I decide to change the color to blue. So all of them will be blue. Okay, all of them will be blue. And I pick 3 points above price, 3 points below price. So as you can see here, I have 0.1. I think by now you should be able to master this. I have 0.1 here. See, this one even touched more than once. I'm seeing 3 touches here. Are you seeing that? So I have 0.1 there. Reputation. See, most of the guys that are very good at what they do or that we envy is because they are emotionless executors. They are emotionless when it comes to applying their principles or their approach. They just do it without being attached to the whole process. They just execute without emotions attached. But our challenge is that anytime we place our trades and the next few moments later, we want to close the trade. We want to, sir, the thing just move $1. Share should just close this one and whole body now. Half bread is better than none. No. What you are doing is you are going to be tampering with your confidence in the long run. And secondly, you are telling yourself that you don't believe in yourself and you don't believe in this trading strategy you have been using. That's what you are doing. So these principles that you are learning or trading approach you are learning or you are gathering so far, it should enable you be able to be firm, to be rigid, have a trading plan that you're able to work with and stick to it. Be an emotionless executor no matter what is happening. Place your stop loss, go and sleep. Place your take profit, go and sleep. Highest you can do is to protect or break even on those your trades, and you are good. Once you trust your trading strategy and you know that out of 10 trades you are going to take, you will not blow your account, fine, go ahead, use it. Are you seeing that? So we have other levels above, below. Let me see. I don't want to go far from price today. Okay. So is the level here. Is the level here. This is another level here. Okay, this is another level here. So we have a lot of levels at that spot, which are equally classified as zones. Okay, very classified as zones. What else? Hey, looking for more levels. All right. See this. This is another level here. See here and here. Okay. You can equally use these spots, but all the same. So this numbers is okay. Let's just go to weekly time frame and see. Who is that person now? Is that person that is doing that? All right, so this is it. Let's get already in weekly time frame. Let's do this. Josh, mute your mic. So this is weekly time frame. So let's pick 2 levels above price, 2 levels below, 3 levels above price, 3 levels below price. So let's see. Wondering what I'm seeing there. This is the level I'm seeing here and here. Okay, that's the level I'm seeing. So let me look for others. Yeah, for others. 2 above price, 2 below price on all time frames. So to be fast, let me just do this quickly. Let me just do this quickly without having to explain my position and all that. The position I'm taking. So I'm taking 3 already. Below price. So let me see if I can take more above price. See if I can see more above price. Or let me see one more directly below price. Let me see. This is above price here. 1, 2, 3. So this is okay. So as usual, I will lock this up to avoid it from moving. It will all be locked up. Okay. I hope we understand what I'm doing. Now, if you notice, I didn't change the line charts into different colors. But once I go close to the line chart, you will see that it will tell me which of the levels, which time frame is the levels that I drew on. So you will see weekly here, you see monthly here. That's how MT5 does. When we are using MT4, you may not get this. You may not get this, right? You may not get this. Let me pick one more level here so that it will look as though that place is void of any level at all. And then there's one more here. I can decide to just stick to these 2 levels alone and let it be without going to daily time frame. Because if you check closely, the levels, the lines are getting much. So right now, we have seen this, that we have several points or levels that price responded or reacted to. Okay, I don't have to put in the rectangular tool like I said, so that it will not make it look very cumbersome and rowdy. So we have this. Okay, from what we are seeing from left to right, so you interpret charts from left to right, correct? So from what we are seeing, if I want to start interpretation, let me put my crosshair and see. Let's see, today is, let's start from March. So March, let's say we enter this market. I started trading March 1st. So this is March 1st. So from March 1st, this is March 1st. Price was reacting on this level, came, retested that level, and broke it up above. Okay, from what I'm seeing here, I'm seeing a structure to the upside. And this is on 2 hours time frame, which is equal to 1 hour, right? There's no difference like that. 2 hours and 1 hour are the same thing. Where is it? All right. This is my guy. So you see, one of the reasons why I don't do back tests is because once you're teaching an approach, back test works. But once you come to applying the approach in real time, back test does not work. Okay, so I rather do front test than back test. Front test is when you apply it to real market condition. You have your students watch you do it in real market condition and all that. That's what you call front test. But when you are doing back test, everybody's back test, everybody's strategy works in back test. But in reality, in a lie, it doesn't work. Are you seeing that? So if you check closely, I started trading March, right? Yeah. And this is the response. Price reacted to weekly levels, went up. Anyways. Right. So just for this is recording so that I don't have to come over this again. Who is this? Please, all right. So this is it. Started trading by March. This is GU, right? Popular GU. We know that it's very volatile and all that. So started trading by March. I saw a reaction here. So I woke up that Monday morning around 7-8 a.m. I saw this reaction. Okay. From there, and with my charts knowledge, my knowledge of structure, I have something like this. I was like, this is a good it's a good setup for a buyer. Seeing that it's also responding or reacting from a very strong weekly level. Okay. And that level has been filled. Am I getting something wrong here? It's beautiful. So would I would like, this is good. So what do I do now? I think this is from last month. It came, created a structure and all that, and then the structure is to the upside. From this alone, it shows me that this is a bullish structure. So however I want to do it, I know that GU is bullish, but I have to wait for this to confirm that bullish movement and then take my entry, because this has already taken has broken structure to the upside, and then here is a continuation of that structure like that, like that, like that. So after I do this, I'm just telling you how to add other things to the demand and supply approach. And I'm not supposed to even do this in the first place. Just tell you how to add other approach. So after I do that, I can mark out my structural levels. It's very rare for you to find textbook structure. That approach, they tell you that price move higher, 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 and it used to be in a very straight line. It's very rare for you to find those structure on charts. So you must have to master the art of deducing structure in market stance or market realities. It's very rare for you to find this one, the one that you see in textbook that the test said this is higher high, higher lows, or the one that you are taught. It's very rare for you to find this. Okay? So what you have to do is you make do with what you have on ground. Right? You need a minimum of 50 pips to determine a swing high or a swing low. Right? Somebody to write that down. You need a minimum of 50 pips to determine a swing high or a swing low. So if price is moving from here to here, this is 74 pips already. That's considered as a swing. This is a swing high. And then if it moves from here to here, it's considered as a swing. This is 52 pips already. So it's valid. So this is a valid bullish structure already. Are you seeing that? It's a valid bullish structure. With this knowledge, you will be able to determine, so should I add structure to this? Blah, 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 like that. And then you will grow from there. You see that? And stick to one thing that works. Stick to one thing that works. Like I said again and again, don't just trade demand and supply alone. Add other things to it. You will see some people use Fibonacci and all that. Add structure to it. Add other confluences. Some uses indicator, 50 moving average indicator into it. The essence is so as to increase profitability in that, reduce their losses, and then to add to confluences. You see that? And so that's basically it. Let's do Uncle UJ and see. So from the look of things, UJ has been bullish. Bullish. Let's change it to 9 charts. We want to take 3 levels above and below price. Let me do this quickly so that permit noise in the background. I need to get this awake, so it's difficult to keep them quiet when they're at home and awake like this. All right, so this is basically it. Have 3 levels on monthly time frame, 3 obvious levels that I can spot. Somebody will be asking where I'm seeing this middle level. Well, let me point that out to you. See here. See here. That's what I'm looking at. All right, so let's switch time frame. So switch time frame to weekly. If you notice, I'm not even involving daily time frame anymore. I didn't involve daily time frame on what do you call it? On I didn't involve daily time frame on GU. So let's have this. This is okay. Okay. I think by now we should already be mastering the art of picking up these levels without having to look too far or too closely. Let's see. So this is a level. This is a weekly, yeah. Just need to pick 3 levels so that our chart will not be clustered. Okay. Can't find it though. If anybody can see anything on the screen, please help me. It's 3 above already. 1, 2, 3. That's okay. 3 above price. Let me see if I can see 3 below price on the weekly time frame. I can't find any other place. Weekly, okay. Seeing this here. Okay. We have this here. All right, so this does it. I don't have to put my rectangular tools so that my chart will not too clouded with a lot of things. So I'm repeating this so that the principles of plotting out or identify your demand and supply levels can be very clear and seated within you. You see, examples communicate principles. So this will have to be done. And then most of the times, principles becomes real to you when you repeat it and practice it. So these are levels. As you can see, if you look closely, you will see that price reacted to those levels cleanly. Okay, price reacted to those levels cleanly. Then one other thing you need to look again, you will see that at those 3 times it reacted with wicks. That's noise. The real data did not capture that wicks. The real data did not capture that wicks. The real data captured only those points that it reacted. Are you seeing that? So that's that. So let's clear this up and see. Oh, so I will tell us what I'm expecting on. I said I was expecting a sell on GU. So on EU, I'm expecting a buy, right? Expecting a buy. Expecting a buy. Expecting a buy. I want to do this. Oh, this is not a rule, though. Everybody knows how to do what he is doing that makes him profitable in trading. I'm just trying to say that if I was the one taking this trade, I would add my trend line to it like this. I'll add my trend line to it. Or I will use another route. I will go through the route of structure using Fibonacci and all that. But this already tells us that I have a structure that is bearish and the character of the structure have shifted already somewhere around here. Okay, somewhere around here. So already we know that we're expecting a bullish momentum to the upside. So they decide to do otherwise and all that, but for now, that's my bias. Should I go a bit more in time frames? I don't think there's any much data in the time frame except what I've just outlined. Then if you check closely, you see that well, let's see how the responses is. Let's see how the responses is. So for GU, its current market bias, if you look at it closely, it formed a pattern. form the pattern, this. So I'm expecting this. Are you seeing that? This is what I'm expecting on GU. And mind you, this is 4 hours time frame. Expecting this. I'm expecting this. I'm expecting this. I'm expecting this, or most likely it can decide to do something otherwise. The contrary, it can decide to do something like this. Because that pair alone is a very crazy asset. Okay, it's a very crazy asset. Cherish. So that's that. So I'm considering two scenarios, but I'm strongly to the buy side, to the sell side than the buy. I'm strongly rooting for this than than I'm strongly rooting for this than, of course, it's GU. You will have to take out a lot of liquidity, take out a lot of orders in the markets before it will finally um, go in the direction it wants to go to. But you have to be patient and flow with it from structural level, demand and supply level, using of your Fibonacci tools, using of all other approaches that can bring out the profitability of using demand and supply. Okay, one more. Let's add what do you call it? Almighty gold. Gold, 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 gold. Or should we do Bitcoin? A lot of people are excited that Bitcoin is going up, blah, blah, blah. Well, it's not like I'm a prophet of doom, but well, that excitement will not live for long, man. The excitement will not be for long. It will soon die down because this guy is going down, 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 down. It's going to come down, down, down. Left a lot of space and levels that he has not filled. If that's 90 days tariff and what's it called, suspension is lifted and the tariff war starts again, you may not like what you see in Bitcoin. So let's have this. This is gold on a monthly time frame. The levels here are not much, so we'll make do with the few we have. We'll make do with the few we have. Let's see. Not find any other level, right? So let's switch to weekly time frame. Okay, weekly time frame is something else. Find any levels much on the weekly time frame as well. So now would they do that thing now? Can you close that door? All right, so this is basically it. And because of the limited number of levels we have here, I think we would have to take more, what do you call it? I have to take more levels on the daily time frame. Give me a moment. All right, so let's go down to a daily time frame and see, because those points we picked on the monthly and weekly time frame are far from where price is. So let's see. We have one here, very nice rendition of a level. Do you have any other one here? I don't see anything here. Would have been okay if there was. Okay, there is. There's one here. All right, guys, if this ends, I think we'll just call it a day. We just have to go and practice and all that. Practice, practice, practice more. Just call it a day with this end so that just practice. Whatever approach you want to add to demand and supply and you want an input or correction here and there, please do let me know so that I can help where I can. Basically, the few levels I can see here. Every other one here is taking easy. Let's switch it to okay. You see that price reacted to those levels. Price reacted. Price reacted to those levels. See that price reacted to those levels on the daily time frame. But let's go to a 4 hours time frame and see what we have. If we wanted to follow this guy by structure, we are seeing that price has been bullish. Character wanted to shift to the bearish side. But this has not been taken out to confirm if gold is going to be bearish. If this is properly taken out, then we'll see gold is bearish. But for now, this is just minor retracement to fill up the space or this entire gap here. Remember I said something, I said price does not like gap. Forex market or the financial market does not like gap. Every gap must be full. For every corresponding buy, there must be an equal and corresponding sell before price continues a particular movement. If this corresponding sell does not happen, if this sells does not happen, the market may either crash or everybody will become a millionaire in the market. So it's not possible. Are you seeing that? And so with this whole thing that is happening here, it's just a correction that may just come like this, something like this, and then goes something like this to the upside. But generally, I would look out for a buying position as to gold than any other position that I would look out for. I'll buy gold more, or short term, I'll sell it and then buy it more. Okay, if you can see, there is also a gap here. There's a gap here. Price has to fill this gap. Price has to fill that gap. So just pay attention to your pairs. While starting out, I would advise that you pick fewer pairs, master them, so that you would become a market specialist and stop running from one group on to another. If it's possible, even just exempt yourself from a lot of social media activity so that you become better in your trading and sharpen your trading skills. on the final note, I want to say that everybody can be a profitable trader. Okay? Everybody can be a profitable trader. It depends on how you wield what is in your hands, how you wield it. If you check some people, all what they know how to do is the use of trend line and they are profitable. Others use indicators and they are profitable. Okay? Find your personality. Find your personality in the financial market. Find your approach that fits your personality. Stay disciplined to that personality. Get a trading plan and you'll be fine. Consistently practice those things that you have learned and you'll be fine in a very long period of time. But if you keep switching and switching and switching, you may not become profitable. Yes, market dynamics will change, so it will affect the profitability of a strategy. Don't change the strategy entirely. Instead, find a way to adapt your strategy to the market dynamics. That way, you can stay longer in the market than changing the strategy entirely. Okay. And so I'm a fan of having a lot of strategies, having multiple strategies, but focusing on one at a time as the market dynamics shifts or changes. So, guys, I think we should just call it a day. For gold, excuse me. Gold, seeing this reaction closely, I'm looking out for sales within this region. Now sales, sales in these regions. Network is, I'll be looking out for sales within this space. I'm expecting gold to come up like this before it does something like this to the upside. Looking out for sell here. And then if you check closely, it coincides with a daily supply level. Okay, so I'm looking out for this to sell it to the downside before it buys. And you know this, if you catch this movement on go from here or somewhere around here, if you catch it from somewhere around here to the downside, that's a whole lot of pips. That's a whole lot of pips. You can change your trading career or your trading portfolio. So let's see, from somewhere around here to here, that's 3,520 pips. That's a whole lot. That's a whole lot. Can change you. So with good risk management and all that, at the long run, every strategy will be profitable for you. Every approach will become profitable. But when you lack risk management, no matter, even if you say the strategy is doing 100% or 90% in a week, without risk management, you will not be profitable with it. Okay, so the only grail of this market has and will always be risk management and all that. So, guys, in the absence of any questions, I think we have to call it a day. Thank you guys for joining me. Sorry, the session is a bit uncalled for. I just did it. Let's see who would respond. And a lot of us responded. So it's nice to have us. If you have questions, please drop your chats. It's not helping. Then I just come up, do videos, talk, blah, 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 and nobody is responding. I think just one person out of the number of us that drop chat. The group is open. I'm not after your money. There's a lot of money in the Forex market. If we are active traders, we will not be looking at our fellow traders' money. But if there is a need to pay for knowledge that will benefit everybody, you would have to pay for it. That's the truth. Because anything that will eventually change your life, especially your trading career, will not come to you cheaply. you will not value it. No matter how you preach it, you will not value it. So as much as possible, let's put in our best. Every knowledge is profitable. Every knowledge is profitable. I have people that trade. I mean, I've seen a lot of strategies. Everybody just covers something. I have one strategy that trades majorly on from even as low as 1 minute time frame on this gold, that the profitability index is something else. It has days that is profitable, days that is not profitable. You have to sit down, work on the strategy for one period of time. Your life account, not work on it on them, work on it on life account. See the profitability index before you determine the days that are profitable, the time in those days that are profitable. A lot of work. So strategy is not, there are a lot of parameters. You have to know time, you have to know days that the strategy is profitable, you have to know pairs that the strategy is profitable on, you have to know sessions that the strategy is profitable in. Are you seeing that? For gold, the strategy I'm talking about, every UK session, London session, I profitable at some certain days. Some other time it will look as though what is all this? The market is after. So with knowledge, you know when to stay on the market, so that you'll not be trading every day and having to be mentally exhausted. All right, guys, thank you so much for joining me. We would see when you start sending your